Let's bring in Joe Terranova now of Virtus and Alicia Levine of BNY Mellon Wealth Management. Joe, of course, a CNBC contributor. Tough day. I mean, the earnings not great, and the data's just bad. I don't know. You want to sugarcoat it? It's just bad data today.
It's recessionary. That's exactly what it is. Philly Fed is minus 31. The last times that Philly Fed was minus 31, 2020, 2008, 2001, 1991. I told you I was concerned about this week. The rhetoric that we heard from the Federal Reserve means they do not understand the environment that we're in right now. Auto loans, delinquencies are beginning to rise. What's the most important payment that you have? It's your car payment. We saw it represented today in the statistics for housing. We see it universally. The economy right now, leading indicators, negative territory. The economy as we sit here today is probably in a recession. Is it statistically in a recession? Maybe it's not. But it sure feels like for consumers that that's exactly where we are. Look at the market. Where's oil? Oil is $1.50 above the level before the announcement of OPEC. That's on demand concerns. Look at gold. If we have a chart of gold this week, you'll see that you had a significant dip down to 1980. They came in, they bought it. Why? Because it's the disinflationary proxy, and the 2 years moving down again. We've got a problem economically.
Energy's weak, Alicia. Tech is weak today. Discretionary is weak. What do we make of it?
So we're slow walking to the recession. It's not the boom that we thought it might be during the banking incident. I'm going to call it an incident and not a crisis, because so far it's not a crisis. But we're slow walking because of the contraction of credit. And the sectors that have got us to this point, with the S&P up 8% and NASDAQ up 16%, are really the sectors that are next up for some weakness here. Because ultimately, you cannot have a contraction of credit in small, medium-sized banks and not have it affect the real economy. Now, I still think the Fed hikes in May. It's all, the market's giving it to them at this point. It's 90%, 88% chance they're going to do it.
Not giving them anything more than that, though, right? If you look at the bond market.
Not giving them any more than that. But if there's a sort of linear progression downward in the real activity, the Fed is not going to cut, because this is what they wanted, and they're going to get it.
Tesla's been a drag all day.
It's down 10%.
How much of an issue is that? On a number of different levels. I mean, it's a $500 billion market cap company, so it's weighing on the NASDAQ. It weighs on sentiment in some regard. Now you have worries about price wars in autos. You look at Ford and General Motors, we could throw those up, too. It's not just a Tesla story today as it relates to that. Demand fall off, you try and raise demand, you cut prices.
So this is my concern. My concern is exactly what you're talking about, and I'm talking towards what's the earnings effect. It goes beyond Tesla. Look at AT&T today. AT&T is telling you that there's economic weakness when it's down 12%. Now, listen, you could say, well, what about D.R. Horton? Okay, D.R. Horton, it's a momentum play, it's low inventory. But the concern that you have right now as an investor, I've said this all week to you, the economic weakness that we're experiencing now was discounted by the market in the fall. That takes you to where you sit, approaching 4,200. What is not discounted is a U-shaped earnings recession. We are in the midst of the second consecutive quarter where you're going to see negative earnings growth. The calendar quarter that we're in right now will by far be the most intense contraction in earnings growth of the 3 consecutive earnings quarters that are going to be negative. We know there's going to be 3 in a row. You're in that. What happens from there? That's what the market has to price out, because the expectation is that you'll begin to come out of it. You'll get, mid-single-digit growth. And then on the other side in Q4, you're going to get the double-digit growth. Well, we really need to see that. And that's what I think the complexity right now is in the market, is figuring out what the shape, what the alphabetical letter for the earnings recession is going to be.